Good evening, everyone. This is Chrissy from Solstice ATR. Hope everybody's enjoying their Christmas and their holidays for the coming year 2021. This is the last week of December 27th to the 31st for the year, the last video I will do. There was a couple of things that happened in the S&P and the Nasdaq. There was a signal flashed in front of us on the 200 moving day average and the 225. It allowed us to recognize the levels if there's going to be a breakout on the short-term, intermediary, and long-term frames for assessing the risk and reward ratio between those indices, as well as looking at the bank, gold, crude oil, VIX, bond market, the dollar in the European zone, their currencies, even the Aussie dollar. This is the ETFs of these instruments, the SPY, QQQ, IWM for the Russell, the DJX is for the Dow. The VIX is the VIX/VX, the TLT is the bond, and XLF is the bank sector, and the VX the fear gauge for the banking sector. As you can see here, I have Apple, Amazon, Baba, BIDU, Facebook, Google, LULU, MELI, Moderna, Netflix, Nike, NVDA, Shopify, PayPal, TSLA, and WYNN Resorts. I want everybody to be open-minded, trade the charts in front of you, be flexible and fluid in the stock market. Don't be biased because the bulls and bears do make money in the market on either side 365 days a year. This information that I'm giving you is for illustration use only. We are not a broker-dealer. Past performance doesn't indicate future results, and data may not be copied. And I will go over those two slides very briefly to give you the assessment on the risk and reward in a simple term. Just remember, this is just for illustration use. Okay. By looking at the S&P 500, whether it's going to be bullish or bearish, we look at most institutions use the 200 SMA as a reference for trend if we're trending above or below for a breakout or a breakdown in the 50 SMA. I put a 225 and a 200 whenever they cross on a long time frame. It gives us an indication what the outcome will be in the coming years for the short underneath 6 months to a year from 1 year to 5 years outlook. There can be a possibility of a drawdown 5 to 6%, 7%, and an up potential rate of return of average of 18% in a 5-year range, 78%. Let's take a look at the Nasdaq. The Nasdaq is in a similar situation, looking at the 200 crossover of the 225 from the 1980s till 2025. As you can see here on the timetable showing the references of 1982, 85, 88, 91, 95, 2003, 2005, you can see that the Nasdaq had a drawdown which is a little bit more significant in the first 6 months compared to the other instrument S&P 500, and we can see in a 1-year outlook 24% and a 5-year outlook 95%. But the short drawdown, we can have a negative year or even 2 years before we can continue higher. We're going to trade the charts in front of us, not what we do think, okay? The most important thing is to tell you, learn how to use a retracement, a fib, and a channel, and maybe a moving average for references for supply and demand zones. As you can see here, I have the S&P 500. We've been range bound in the last 5 days. Let's break it down by putting the other 5 instruments first, and we'll come in one by one. SPX plus the NDX plus the RUT, the small cap, plus the the DJI, the Dow Jones Industrial Average. The DJT is actually the transportation. On the 15-day range, 78-minute, we've been range bound. We tried to break out last week on Thursday, and eventually on Friday we fell down. Then due to the noise in the Eurozone, we have a couple of issues we have to consider. The COVID-19, if it is contagious, not contagious, is there a vaccine for it? The stimulus package, where is it going to be voted in the US or not? The British exit, as well as the lockup, and we're going to trade that's what's given to us, not what we think, because you can trade on either side being bullish or bearish and make money. Don't be biased to one side because you will get caught, whether it's on the short term or long term, if you're opinionated to one side. Let's take a look from this range from the high to the low. We can see on Monday we recovered most of the move. Tuesday was an inside day. Wednesday was an up day, and on Thursday was an inside day of the Wednesday range, but we closed a little bit positive on the combination of those instruments by a hairline. What I want to say here, I have been trading for almost 14-15 years behind a desk full time, not part time, and I haven't seen the volume from 2001 or 2005 or 2008, 2009, 2013, 2015, 16, or 2018, 2019, and 2020, the light volume that we had on the indices on Thursday. So light volume, I have a friend of mine that always said, J1 D, light volume killed fuzzy. And usually that happens a lot. When there's light volume, the bulls and bears can push the price either to the upside or downside on resets very fast because the machines are trading these days. Humans are not as active as before. So that's what we see. Let's take a look at now the YM. That's the Dow. You can use the DJX for that. We are range bound in the last 3 weeks until we get a breakout above the 30,200 or below the 29,940 area to continue either up or down. Let's take a look at now the RTY. The small, more bullish than most of the instruments, has been grinding higher ever since the last month or so compared to the Nasdaq, S&P, and the Dow. This is last week's reaction due to the London lockdown in Eurozone. We recovered 80% of the move. Then we fell down in the overnight on Monday. Tuesday we recovered. By Wednesday we recovered 100% of the move and continued higher. By Thursday we looked up as the annual high for the Russell, and we eventually fell back in the range of Wednesday to close just slightly a little negative on the small cap. Let's take a look at the S&P 500 ES. As we have been range bound the last 3 weeks, looking up, coming back in, looking up, coming back in. The 3700 is mental, and the 3668 is mental. We're going to keep an open mind on either side for a breakup or a breakdown in order to continue in the direction of the move. If we look at the Nasdaq, the NQ, which is the QQQ, you can look at the first page that I did in the video to give you clues what instruments to use. As you can see, we were range bound. We looked down. We broke up the week before. Then eventually on Friday, we gave up partial of the gains. Then eventually on Friday afternoon, we recovered 100% by pushing in the last, 20 minutes back up to the prior Thursday's range high, and we set up in that area. We looked up on Friday, then eventually on the overnight, due to the Eurozone as well, like we said before, London and stuff in Euro, we dropped down. We recovered 100% of it by Tuesday. Wednesday, we looked back down, and Thursday was an inside day. We are in a symmetrical triangle. We have to keep our eye on Apple, Amazon, Googles of the world, the Netflixes, to see if there's any change in the direction of the Nasdaq top 100 and if they are moving into more defensive stock as well as the small cap in order for the reopening or closure of the economy. Let's now go down to the gold, GC. GC, as you can see, we looked up, we were trying to break up in the week before, which we had a nice run up here. We consolidated on Friday, and eventually Monday we gapped up. We fell back range down. We went back up to the 50%. We fell back on Tuesday in the overnight. Wednesday, we had an order sitting around the 1850 area, 1856. We never got to it. We broke back up. We were inside the range of the last 5 days. In order for gold to continue higher, we have to clear the 1895 or fall below the 1865 in order to get direction on a trend. So trade the charts in front of you. Let's take a look at oil, crude, CL. As you can see, CL was, eventually trying to break up. We had that nice almost $50 range. We fell back due to the noise in inventory and lockdown. We created a Monday push up. Wednesday, Tuesday, we fell down. Wednesday, we recovered 100% of that move to the two-thirds of that move above the 38. We looked up on Wednesday night, Thursday, early morning. We fell back in to recover two-thirds of the move, and we closed basically on a neutral up move above the 38%. In order for oil to continue higher, we have to clear the 48.90 area, or we have to fall below the 47.50 in order to find direction on either side. But we are still inside the prior range, 3 weeks range. In order for oil to continue up, we have to keep an eye on the inventory as well as the Australian, because it has to do with a little bit of transportation, importing, exporting. And Australia has, mining and stuff like that, as well as America, to see if the inventory of oil is going to be used or not. Let's take a look at AAPL, make it short. AAPL, Apple was basically an announcement here on Monday about, they want to create an electric car, and this was a spike up, then we consolidated range bound. Keep an eye on the 128.80 cents as a line in the sand, or if it breaks above the prior Tuesday or the Tuesday range in order to continue higher. Let's take a look at Amazon. Amazon, a little weaker, we grinded back down. My eyes are on 31.50 as a reference, or 31.65. If it's going to fall through there, we'll look for the 3100, 3120 area in order to get support, or if not, we look for the breakup above the 3200 in order to continue higher in Amazon. This is taking a look at BABA due to the fact China, as well as, there was a little glitch in politics, and it caused BABA to get a big reaction to the downside. Eventually, on the daily chart, it filled the gap from July. But in July, that gap was filled. Some people will look at the range. Didn't get much out of the push up in the morning. They got a little push, and eventually it reset and fell below the 25. It fell back down to the prior range of the breakout within 100% of this full gap. For BABA to continue high, it has to break above the 230 to continue fill partial gap. And if it falls below the 32.11 area, keep an eye to refill backside of the 38.50.61 in order to get support and get a nice bounce back up. Either way, when BABA settles and either breaks above, you look for the gap in here, partial, or it falls down, you look for a partial reset, to the 195 and a little bit below in order to find support there. Let's take a look at GOOGL. And you can see GOOGL on the daily has been range bound. Let's go to the 78. You can see range bound until it clears. It needs to clear 1745 to continue higher. And if it falls below the 1720, you look for the other side. Let's take a look at Moderna. That's in the biotech for the, the COVID or Pfizer, MRNA. I'm going to put one of them. As you can see, Moderna has, fell quite a bit. In order for Moderna to continue high, it has to clear the 133 area to continue higher. Or if it falls through this area, you look for the other side on the daily chart back to the 105 area to continue higher. We'll put the daily up so you can see it. This is the gap, the professional gap that it had from the announcement. This is the area it needs to consolidate in order to continue higher. That's Moderna. Let's go back to the 78-minute. We'll use two more, and let's take a look at Netflix and NFLX. In a similar situation, grinding lower. In order for Netflix to find support, it has to hold the 505 or the 510 in order to continue higher and come back to the prior linear regression channel of 38%, which is around the 520 in order to continue higher. And if it falls through here, you look for the other side of the 61.8. Let's take a look at Tesla. Tesla was added to the S&P 500. Has been added. The 670 is a very critical area for Tesla to continue higher. If not, it does lose that area and it loses the 620, 630 area, 625. You'll look for the backside of the 605 and eventually the 585 area. Let's take a look at when due to the resorts, hotels, going out to casinos. If there's an opportunity for people to go back. This is the drop in the because of the Eurozone. We recovered 2/3 of the move, but we have not been able to, we found support. We broke up eventually on Wednesday. We looked above to the 16, 17 area. We fell back to the 13. This is a very critical area, the 13, 12 area, in order to find support, in order to continue higher. If it does fall back through, you look for the 61A and eventually back to the other side. So that's when. Let's go back to the ES. I want to show you the volume profile, how to use it in simple. I want you to do, it's very easy to do. You can use the volume profile anywhere else, or you can use the monkey bars that's offered through Thinkorswim. It's very easy to look at. Let's just zoom down. This is a 5-day range. This is because of the euro. Look up and fall down and come back in. This is the value area high, value area low, and that's the POC. This is where the most time was spent high and low, and most time spent is that green line. We use this as a reference. If we are inside the range, we trade, the back and forth support and resistance until we break out of that range. If we get a gap up, we cannot hold the gap back up. When we come back in range, we look to fill the gap, correct? So if we go in the value area high and we close in the first 30-minute bar inside that candle or 15-minute, we look to go for the POC where the most contracts are. If it bounces off that and goes back up, this is more bullish, it continues higher. It's vice versa if we're coming from the bottom and we go into the value area low, we do not close inside that 30-minute bar and come back down, that's bearish. And if we go back in and close inside it, we'll look for the POC and eventually the value area high. In relationship, if we gap down and we can go sideways, this is considered to be gap down, accepting price in the down range or the up range. It depends on which side we are on. Or do we continue lower or do we continue higher? And that's how you use the volume profile in relationship to any instrument you trade, whether it's the equities, options, futures. It gives you an idea where there are gaps in the profile, where are acceptance and not acceptance in the price action. Let's go back from monkey bars to standard. And if you look at it a little bit more faster time frame, I want to kind of give you a little bit of an idea on the 15-minute on Thursday. This was a good indication of showing you how to use these levels. As you can see, we were range bound from the day before. We came back to the 3680 area. We found support at 82.85 and eventually we broke back up to the midpoint. If you take the measurements from high to low in the overnight, this is your mid area, and eventually when we broke through the mid area, it looked back to the overnight high. We tested the 95.96. We got a clean top and we eventually closed in the 92.94 area. Does that make it positive? Yes. Does it make it negative? Yes, but it's inside the range of basically looking at the open range high and low in relationship to what we look for the bottom and what we look for the top in the price action. And usually what we do, we measure the highs and lows, find out where the midpoint is in relationship to the 38, the 61 area in order to look up or look down. We are in a symmetrical triangle. Until we break out of this area, we are range bound in the direction of the moves. So I hope this was helpful. Take care. I look forward to seeing you on Discord. My handle on Twitter is Chrissy Farah. At the same time, you can subscribe to this video. It's free. Hit the like button and subscribe. You'll get every week the weekly video in your email box to let you know. You can go check it out. Take care and over.